We have a big deal in the railroad industry to talk about this morning. Canadian Pacific has agreed to buy Kansas City for $25 billion. And this would create a rail network of about 20,000 miles that links the U.S., Canada, and Mexico. What's interesting here, the CEO, Keith Creel, his mentor was Hunter Harrison, who was sort of the railroad industry pioneer who revolutionized the industry, made it more efficient through what they call precision scheduling in railroads. He had been resistant to a deal like this, didn't want to buy a railroad with operations in Mexico. So Creel saying this is a new era and a time to make this deal, which, by the way, is coming at a pretty hefty premium here, 23% higher than Friday's close, which was a record for Kansas City, and is 30% higher than an offer that came from Blackstone and another private equity firm in September. So Brian Sozzi, not only is he saying it's a new era that's worth paying up for.
And Julie, Creel's mentor might be that legendary figure, Hunter Harrison, but his spirit animal might be Warren Buffett. Let's keep in mind, Warren Buffett, November 3rd, 2009, came out while the economy was still struggling because of the Great Recession and said he is buying Burlington Northern, which was then the second largest railroad, for $34 billion. And I think that's what you're seeing Creel here do, really going out to Kansas City Southern and saying, hey, guys, we need to get this deal done before the economy snaps back in a big way post-pandemic over the next 2 to 5 years. A couple interesting things to note here. Speaking along the lines of that economic recovery, carloads, North American carloads through the first 10 weeks of this year are up 2.8%. That is good. That's according to the Association of American Railroads. So the economy has started to improve just as you look through the lens of the carload data. Number two, Kansas City Southern has 16 Mexican car factories. That is a good place to be as the U.S. Moves more to electrification, car electrification. You could see a significant upgrade in cars. And so have a bigger operator here in the railroads. That is very, very important. If there's one thing also, too, I've learned, maybe the third factor worth noting, synergies. You know, as part of this deal, Kansas City Southern and CP, they're calling out $789 million in annual cost synergies through the next 3 years. If I have learned anything covering these types of transformative deals, where you stick these two type of large companies together, that number over time will prove even more. You could see a re-rating in the stock. You could see a re-rating in earnings projections as some of these synergies come to life.
And, you know, Sozzi, you mentioned KSU's exposure in Mexico. I remember writing back in 2017 about how this stock was kind of the proxy for, U.S.-Mexico trade tensions. At the time, the story was KSU had gone from about $100 a share to like 85. Well, now it's getting taken out about, 4 times that almost. So I guess it worked out fine for Kansas City Southern shareholders there. But just an interesting thing that I learned in reading up about this story, which, look, I don't really cover the railroads that closely. KSU, only railroad that moves north to south. Most of these guys, they go east-west, and then I guess they all meet in Chicago or whatever and continue the journey from there. So I guess we'll learn more about the railroads when we get Pete Buttigieg's massive high-speed railroad project across the country or something. But I found that to be an interesting nugget.
Yeah, just a couple more things to note here. They might have cost synergies, as Brian alluded to, but they're not. They said they're not eliminating any workers, and they're going to have a combined about 20,000 workers. They do operate north to south, but they also have an east-west, so this is going to be sort of a T-shaped network. It's still going to be the smallest of the major railroad networks here in the U.S., and that may be one reason why most analysts say it's going to get regulatory approval, but it's going to take time. It's going to take about a year, perhaps, to get this deal through. And then finally, an interesting aspect to this deal, and something that we're hearing from the other railroads as well, railroads sort of touting their climate effect, their ecological effect here. That is, that they are more energy efficient than our trucks. And so if they're able to convert some trucking capacity to rail capacity, their argument goes, that's a good thing for the environment. So we'll see if that argument also proves persuasive when it comes to regulation and to investors for that matter. Brian, did you want to chime in on that as well?
Worth noting, this deal is not going to be approved potentially tomorrow or the next day. The teams are calling out mid-2022. And now I think all eyes have to turn to the Surface Transportation Board. That is the key agency government agency that will be tasked for final approval. And new chairman there, Martin J. Oberon. He was appointed Metra in 2013 to oversee the Chicago region's commuter railroad. So he has extensive railroad knowledge. But now it is on his shoulders eventually to approve this deal or not approve this deal. And it comes down to whether this deal would be good for consumers. That's how the Surface Transportation Board looks at these railroad transactions.
Going deep into the railroads here.